Hey, VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. I am licensed to do mortgages in South Carolina, North Carolina, and Virginia. Today, I want to talk to you about qualifying for a VA loan during or after a bankruptcy, right? I get this question quite a bit. I've filed for bankruptcy. I've come out of bankruptcy. Can I get a VA loan? How long do I have to wait? What restrictions are there on me? Well, today I want to go over all of that. We're going to briefly cover the impacts of a bankruptcy caused by self-employment, but otherwise, your ability to be pre-approved for a VA loan after or during a bankruptcy will depend on three factors. Number one, when you were discharged in bankruptcy. Number two, the chapter of bankruptcy you filed or ultimately were discharged from. And factor number three, the circumstances surrounding the bankruptcy. Let's take a look at each one in a little bit more detail. Also, stay tuned all the way to the end of the video when I'm going to touch on something that can collaterally impact your VA loan, even though it's not technically part of the bankruptcy process. Okay, so the biggest factor in determining whether you are eligible for a VA loan after filing for bankruptcy or really being discharged from bankruptcy, I should be clear, generally speaking, the discharge date is going to be the controlling date. So if you filed for bankruptcy 6 years ago, but were only discharged 2 months ago, you may not have eligibility for a VA loan yet. So if you are more than 24 months after the discharge from a bankruptcy, generally speaking, you will be good to go. You will be eligible for a mortgage. In the eyes of the VA, you have sort of rehabilitated your credit worthiness, and you can now get a VA loan. Keep in mind, depending on the circumstances of that bankruptcy, there could have been a negative impact to your credit score, and that will have needed to have rebounded sufficiently to still be eligible. What if you were between 12 and 24 months post-discharge from bankruptcy? Well, the answer is you might be eligible for a VA loan. It depends on the circumstances of the bankruptcy, and it depends on the chapter from which you were discharged or filed. Let's take a closer look. Okay, first, what about a Chapter 7? Chapter 7 bankruptcy, generally speaking, is the liquidation of your estate, right? In a Chapter 7, you are definitely eligible after 24 months, potentially eligible after 12, but you have to meet certain conditions. Okay, so what if you are between 12 and 24 months post bankruptcy discharge from a Chapter 7 discharge? Well, the VA language says it's probably not possible for you to be eligible for a VA loan unless you've met two wickets, okay? The first wicket is that you have reestablished your credit. Really what they're looking for is that you have taken out a new debt obligation, a new line of credit that was pulled out after your bankruptcy discharge, and you have made payments over a continued period of time. Okay, so let's look at this a little bit closer. So that new debt could not have existed post-bankruptcy, and you need to make timely payments on that new debt for quote unquote a continued period of time. What does that translate to? At months 13, 14, 15, it may be hard to qualify for a VA loan because that's not that much time to reestablish new credit. It's maybe even more difficult very soon after the bankruptcy because not a lot of creditors are maybe willing to extend you credit. So number one, you have to have new credit. And number two, you have to establish timely payments. Again, what does a continued period of time, to use the VA's language, what does that mean? How long is that? Well, they don't really say, and they don't provide specific guidance. It's going to come down to the individual investor or underwriter. What does that mean? I would think it means at least 6 months. It probably does not mean 2. It probably doesn't even mean 3. Maybe it's 4 if you're able to establish multiple new lines of credit. But again, I would guess most underwriters are going to want to see 6 months of reestablished post-discharge new credit performance. The second wicket To be eligible for a VA mortgage, if you're within 12 to 24 months of a Chapter 7 discharge, is that you kind of need a good reason for why you filed bankruptcy. And the VA lists a couple within their regs. In other words, if you filed bankruptcy because of financial mismanagement, then you're not going to satisfy that second requirement, and you're going to have to wait until you're 24 months past your bankruptcy discharge. So, what would be a good reason to file bankruptcy? In other words, what would be an acceptable reason to have filed bankruptcy? Let's take a look. So the VA gives some specific examples of what would be essentially a good reason to have filed bankruptcy. It's almost like an excusable bankruptcy, remember, once you're past 12 months. The VA lists a couple examples, including loss of work due to prolonged strikes. So if you are in a labor union, you were out of work for a long time due to prolonged strikes, that precipitated a bankruptcy. That could be sort of an excused reason. Medical bills not covered by insurance, if the circumstances are verified, those can be kind of good reasons to have filed for bankruptcy. The VA does not say that this is an exhaustive list. In other words, that's not the only reasons why you could be. Those aren't the only good reasons to have filed bankruptcy, but it's kind of hard to think of another one. If you filed bankruptcy because of personal financial mismanagement, you're not going to be able to satisfy this requirement. And again, like I said at the beginning of the video, there are separate circumstances and a separate analysis. If you filed bankruptcy because you were self-employed and that business failed, I'll do another video on that topic. But generally speaking, they want to make sure that you're back on your feet after a bankruptcy caused by the failure of your own business. Okay, what if you are within 12 months of your Chapter 7 discharge from bankruptcy? Again, we're going off the discharge date, not the filing date. If you are within 12 months, the VA uses sort of misleading language. It's kind of tricky. Let's take a look at the quote from the regulations. The VA says that if you are within 12 months of a Chapter 7 discharge, it will generally not be possible to be eligible for a VA loan. Okay, what does that mean? Why would they say generally not be possible? It sounds like you can't, but they leave a small opening. I've yet to come across an investor that's willing to take a risk on a borrower who's within 12 months of a bankruptcy discharge under Chapter 7. Now, the VA does leave you this odd escape valve, right? They say generally speaking, but remember, the investor wants that loan to meet VA regulations. They want it to be sold in the secondary market, right? That language does not give them enough wiggle room, enough tolerance where they're going to feel comfortable going after this. Now, is it possible? I suppose. If it was impossible, I suppose the VA would have written language that said, you can't do it. You absolutely can't. Stop. What are you doing? Don't do that. They don't say that. But again, functionally in the real world, it probably won't be possible. Again, I haven't come across an investor that is willing to do bankruptcy filings or bankruptcy discharges within 12 months. Okay, what about a Chapter 13 bankruptcy filing? Is this any different than a Chapter 7? Well, it actually is. Remember, if you're 24 months post Chapter 13 discharge, it's just like a Chapter 7, you're good to go. You are absolutely in the clear. But can you be pre-approved for a VA loan before that? Yes, you can. The rules are less strict on a Chapter 13. In fact, you can actually get approved for a VA mortgage while you are in a Chapter 13 bankruptcy, while it's still ongoing. Okay, remember, a Chapter 13 is sort of considered to be a rehabilitation. But under Chapter 13, during the bankruptcy, you can actually still get pre-approved for a mortgage. But what's the catch? Well, remember, you're in Chapter 13. All of your finances are being supervised by a bankruptcy judge and likely a trustee who's in there who is sort of representing the interests of the various classes of creditors. So they may not be that keen if you're filing for bankruptcy. If you've sought the protection of the bankruptcy code, you going out and buying a big old house, right? That may not work that well, but there can be reasons why you could be eligible. Either way, keep in mind that it is going to take a long time. You need to get a hearing before the bankruptcy judge. You need to proceed a certain amount of the way through the pre-approval so that the judge can review the terms of the mortgage. The trustee may need an opportunity to object to the purchase or have some input on the purchase itself. So while this is possible, it could be a drawn-out process, and it's not going to feel like a typical 30-day home purchase closing. So to bear down a little bit more closely on this, after 12 months from a Chapter 13, you are generally considered to be good to go. 12 months after a Chapter 13 discharge, you're eligible for a VA mortgage. Compared to a Chapter 7, the 24-month mark is really kind of the hard stop, or really, when you're totally in the clear. And you can actually do this faster than within 12 months of the discharge date as well, but you have to meet certain characteristics. And actually, these rules apply in the bankruptcy as well. Generally speaking, the VA regs want to see that you have completed sort of a course of payment that has been prescribed to you by the bankruptcy judge. Okay, let's do a quick recap here on how bankruptcy impacts your eligibility for a VA mortgage. Number one, 24 months after your bankruptcy discharge, you are deemed to be creditworthy, or your bankruptcy has recovered from the bankruptcy. Keep in mind, this does not include any credit score restrictions. If your credit score still hasn't rebounded from that bankruptcy, that may separately interfere with your eligibility for a VA loan. Okay, number two, if you're within 12 to 24 months after a Chapter 7 discharge, you're probably not eligible unless you've hit both of those two wickets, meaning you filed bankruptcy for a good reason and you have rehabilitated your credit history. 3, after a Chapter 13 discharge, generally speaking, you are good to go after 12 months, possibly faster, and you could even do it within the bankruptcy proceeding itself if you have approval from the bankruptcy court, which could include the judge and the trustee. Okay, now I warned you at the beginning of the video, there is one big thing to keep in mind, and I've seen this happen to my borrowers before. If you focus only on the discharge date, remember, the bankruptcy could have implications outside of the bankruptcy, right? So what exactly does that mean? Maybe you didn't lose your home as part of the bankruptcy, but maybe you've kind of forfeited your home, and there's specific bankruptcy terminology for how that process works. Maybe you've given up that asset, you've relinquished it to the bankruptcy court, but maybe it takes time for the creditor, right, the mortgage company, to foreclose on that home and sell it or transfer title. This is going to create sort of like a hidden grenade, right? If that doesn't go off for a later process, while you may have satisfied the bankruptcy discharge timeline, right? You're now 24 months post-bankruptcy discharge. All of a sudden, let's say that title hasn't been transferred post-bankruptcy until a year later. That's a separate restriction, right? That foreclosure is now starting after the bankruptcy and could further delay your eligibility for a VA loan. So if you're working with a mortgage bank and your home is at all within any kind of stages of foreclosure after the bankruptcy discharge, you want to be mindful that that could come back and have a negative impact on you. Okay, so in summary, yes, you can qualify for a VA loan after a bankruptcy. You just have to meet certain timelines. Generally speaking, the VA is very permissive in terms of bankruptcy or former bankrupt borrowers. And you're lucky to have that VA entitlement, and you'll probably get pre-approved faster with a VA mortgage, even faster than FHA. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. If you would like to talk to me about getting pre-approved for a mortgage, if you've ever filed for bankruptcy and need some more advice, please contact me. Again, I am licensed to do mortgages in South Carolina, North Carolina, and Virginia. Please shoot me an email, send me a text message, give me a phone call, leave a comment below. I'd be more than happy to get you into your next house.